All right, what's going on, everybody? Hopefully, y'all having a good day. Been poking around Nvidia's earnings, looking at a lot of stuff, and there's no edge. Sometimes you get a real heavy position on one side or the other, and it stands out. Like we say, somebody knew ahead of time sort of comment, but looking around, really don't see that. It's not to say that we don't have anything, and I wanted to show some of it, which I grabbed it in advance, right, so that I wasn't fumbling around for it. So I'm gonna put it in the chat, and then we'll bring it over to where we can see it. Let's start with a simple Thinkorswim chart. This is one that you guys may have seen before. It's my basic earnings chart. It's on the screen, but I'm pretty sure that's hard to read. So here's a zoomed in image. We'll just bring that up so we can see it. And I like to scrunch it up when I do that so that the labels are kind of grouped together. I only went back over a 2-year time period, so that's why it's looking at 8 quarters. And it looks like a lot if you've never seen this before, you might be thinking, man, what is all this noise? But once you get used to the shorthand in here, it's really helpful. So when we clean it up, what it says, NVIDIA has a history of front running their earnings. They like to pull forward that earnings announcement. So in the 21 days before it reports, it has an average move of about 11%. It's about $15. In the 8 days running up to earnings, it has a history of going flat. So it runs up, and then everybody's like, oh, earnings. And then it just pause, time out, and it goes sideways. Now, if you guys remember a couple of years ago, it made the entire market go sideways, which was pretty cool at the time, but it only happened once. And since then, we've kind of shuck it off, and we haven't really had that impact since then. But we can see that that's the typical NVIDIA approach, right? That it generally goes sideways in that last week before earnings. Then we've got the 8 days after earnings and what the average is there. Not even 1%. So about $1.15. The next four boxes cover big moves up and big moves down. Now, I don't know. What do you consider a big move? This label is looking at 5%. That's fair, right? 5% is a pretty good move in an 8 day time period. So when we look at this and we say, okay, in the 8 days after earnings, how many times did Nvidia make a move bigger than 5%? And remember, it beat 7 out of 8 times. Only two of those beats gave us a move bigger than 5% within that 8 day period. Okay, one of those 8 earnings, seven that beat, had a move that was positive, but not 5% or greater. So even when it beats, NVIDIA's got a history of going down, not up. When we look at the other stats, the one in orange, Big moves to the downside greater than 5%, three. So even though it missed once, it's had three really big moves to the downside in that 8-day window, and one move to the downside that was between 0 and 5%. So we learned a lot from these labels. It has a really nice ramp into earnings, and then it stalls out before earnings. And that even if it beats, a lot of times it goes down rather than up, and the down move is typically greater than 5%. Now, that's really useful information, right? But every earnings is different. So, this gives us a little taste of what it's done in the past, but it really can't give us an awesome projection into what's going to happen this time. The next one that I just shared in the chat is the implied volatility over the last 2 years. And if you're not familiar with this, I get it. It can be kind of nerdy. We can see where the earnings was with this gray dashed line. So we get the ramp, the implied volatility ramp into earnings, and then we get the volatility crush on the other side. This is really common, right? It's what most companies do. They get that vol crush. So one of the things that you want to look at when you're looking at something like this is A, where are we usually in the elevation before we report? And B, where are we this time in the report? Because those two give us a pretty good idea where we're at. Then there's how did we get to where we're at? And you'll notice this really strange kind of, I don't know, wobble. This really tight consolidation in the implied volatility here, where we're not going anywhere. The dealers and market makers do that, right? They'll hold the volatility still so that it can be projected for earnings. It's a little bit of a cheat, but it's not new, right? There's nothing we can do about it. And when they've been confronted with that in the past, they say, well, we do it for the benefit of traders, you, me, everybody, because if the implied vol holds steady into earnings, we can better project the price moves. Whatever, right? Good, bad, like it, hate it. It's manipulation, and we all know that they do it, and it's clear. So there's no real argument about it. They've tightened it up really well. Look at the last earnings. When we reported, where's see this vol crush? We got the report, it dumped. We got the report, it dumped. We got the report, it dumped. Surprise. Same thing here, same thing here, and here. And then, oh, look what happened last quarter. It's a little odd. It's funny, I used to say that we always get volatility crush after earnings. It's what I used to say until Beyond Meat. I don't know if you guys have ever traded that, but I remember when it IPO'd, and it's one of those weird companies. And it actually did something I'd never seen before. It had earnings, and after the report, the implied volatility didn't get crushed, it went up, which is really weird, right? So now I don't say that we always get volatility crush. And I actually look at what happens after the report to see, well, what really did happen to volatility. And if you look at NVIDIA's last earnings, we got a little bit of drop, right? But I mean, not very much at all, because we seen the same drop a week before it reported. So it had a little drop and then it tightened up into a consolidation and it did not get vol crushed. Very odd. So does that give us insight into, like what's it going to do today? No. Absolutely not. This isn't giving us any idea. Should we go long? Should we go short? Right? That's not helpful. It's just giving us some clues into what's happened in the past and where we are at this time. This time is different. It doesn't look like a lot of these others. It's also worth considering where we are at. So I'm going to just mark the level we are and throw it across the screen here. And when I do that, you can see that in the previous earnings, we were way up here. We were above zero point 0.7, maybe 0.75. And in the earnings before that, we were right around 7%. In the earnings before that, it was this level again, pretty much, right? We're not splitting hairs here. Then we had an earnings way down here, right? So 6.8-ish. And then we've had one below our current level. Now we can keep going on this, but you get the idea. We want to compare where we are with where we've been in the past and kind of ask that question. Have we had an earnings where we are lower in the implied vol than we are this time? Yeah. Q3 of 2022 looks like 2023, maybe. Let's drop back in and look. That would be, well, 2024. All right. No, it was back here. 2023. Yeah. So one earnings where it was less than where we are now, right there. And if we look at what happened after that, we had a decent vol crush and price really didn't do much. A mild fade to the downside, 0.2%. And then over the 8-day period, we faded down from, these weren't the actual price levels. We've taken a stock split since then, but from 50 down to 44, a $6 move lower. Not much. What's uniquely different this time around is this tight consolidation that we're in the implied vol. Now, in that first picture I shared, we could see those lines that were there. It shows the market maker move and the one standard implied vol. I actually like to add those two numbers together and then get a projection beyond that. All right. So if we add the 8 and 11 or 8 and 3, then we get a higher number. And if we come in here and look, I think we get a different number too. Yeah, 9.5 is what we're showing here for the implied vol 2 days out. So 9.5 plus 8.5, right, is a completely different number. So put those two numbers together, we get some projections. That'll give us our plus and minus on the week, right? Or on, yeah, I say the week. That's an accurate way to say it. So what else we got? I'm going to highlight the picture that I took about an hour ago, put it in the chat. The market maker move and the implied volatility average that we would want, and we add those two together. And when I did the math, it came out to $18.50 plus or minus, right? We don't need to worry about rounding it to the nearest penny, anything like that. $18.50. That's a pretty big move, right? So if we take that $18.50 and we actually draw the lines out on the chart, this is what we get for the plus and minus range. And if you're wondering what would we do with this plus or minus range, one of the most popular trades for earnings, other than just speculatively buying calls and puts, is an iron condor trade. You're looking at 155 on the upside and I don't know, 116 on the downside. That's a very wide move, right? Now, you could build a butterfly on either one of those. That would be the cheapest way to play this trade that actually has a really nice payout to it. And or you could do like a call vertical on the upside, a put vertical on the downside. So this is nearly a 13% move. And in the last 2 years, we've only had one move where we went more than 10%. It was like an 11% move. Right? So if we bring up that chart again, 6%, there it is, 11.2%. This earnings right there. That's it. So 13% is what's on the table. Then we've got some GEX levels that we can look at. I'll put that in the chat. And this is from Tradietics. Got the highest GEX level at around 145-ish, and the lowest GEX level at 140. If we look at what Thinkorswim has, kind of go into the options for today, see if we can get any clues about what is being traded and how it's being traded today on NVIDIA's options. Maybe that would give us some insight. 1.4 million calls, not even 1 million puts. Both calls and puts are trading above their average by nearly 50%. And 41% of all the puts traded today are hitting at the bid and below, which means they're being sold. Right? You hit ask and above or bid and below. So they're selling puts, and they're selling those puts between 0 and 20 delta. You can see 59% of all those options being traded on the put side were very far out of the money puts. So that's the trades that are being put on this afternoon, is far out of the money short puts. It would make you think a little bit bullish, right? Or at least not bearish. You sell puts and you take that money and you buy calls. That's what the average trade is, right? But usually it's like a 2 or 3 to 1, right? And we're not seeing that. Normally you would, sell 3 puts to buy a call kind of thing because you're trying to get the premium in the position to be as close to zero as possible. You use the shorts on the puts to finance the long calls. And that's not what we have here. And it's not even a ratio of like 2 to 1 in the other direction. It's just we have those puts that are being traded, and separately, we have these calls that are being traded. So what else do we have? We've got whale positions and dealer gamma levels, right? Dealer deltas. So this also from Traditix, the dealer deltas in red down here. Now think about it. If the dealers are red, then their customers are green. So when the dealers are heavy on the red side, then their clients were heavy on the green side. We can see that that doesn't always work, right? It's that sell off in NVIDIA here, but it does kind of show the peak of when they swapped. So NVIDIA started to fall, their clients started buying puts were turning negative, and so the dealers turned positive while the broader market went negative. Yeah, it makes sense. Just, be mindful that it doesn't matter if the collective wisdom is long or short, the collective wisdom has been wrong before, right? So there's always that. And then we've got the whale positions, which, we can tighten up and take a look at this. 140 is the whale target on the upside, resistance is 137, and support is 120. That's a long ways off, right? 17 points between support and resistance. And we're pressing against that resistance right now. You want to go long when you're already against the ceiling? So what else we got? This is from Traditix. So we can see the algo flow for today, today's sentiment, the longer term sentiment, and the dominant contracts being traded today. December 2026, 130 calls. Okay. And remember, those are being traded today. That's a little bit of a keyword you want to keep your eye on. Now we have the daily premiums heat map and the weekly premiums heat map. I circled this Friday's expiration. We can see that 145 is getting hit really good. And on the weekly, this Friday's expiration, the 120s are getting hit really good. If we look at June 20, next month's OPEX, both of them were in the 120. I didn't circle this side, but that was 7.2 and this is 4.2. And we already talked about that ramp in price. We can see that reflected in the options positioning right here. So they started to fade out of all of their positioning around May 13th. Kind of picked back up a little bit. That was that likely that positioning into the economic events, not necessarily related to NVIDIA. And then they've been selling back off again, really just slightly above where they were at on the 20th. So in the last week, a little rope a dope right back to where we were. And the open interest is really still kind of elevated compared to where we were a week ago. But From the 13th, which is really where this starts to fade off on the open interest, it's off of this peak here. So institutions and big funds and firms, they are exiting their position. Where is all of their exuberance and their fantastic support, the trust, the we call them the iron hands or whatever they call them? They're going to hold on for dear life. Well, apparently not. They're getting out, reducing their position size in front of the risk. Diamond hands, yes, sir. Thank you. I was thinking of Minecraft and iron hands, but diamond is better. Netherite hands. How about that? If you don't play Minecraft, you probably have no idea what netherite is. Just think of platinum. This is an open interest for this Friday's expiration. Obviously, very heavy on the call side. We can see the really big positioning 140, 145, 150, big five levels. Um, their positioning stands out 135, 130, 125, 120. So, really, no surprise here in the immediate open interest for this Friday's expiration. What was interesting is when I clicked on the map to choose the June expiration, OPEX, the map menu is actually organized by the greatest amount of open interest by date. So I paused there, curiously interested in the outcome that it was showing us. And I'm going to bring that up in the browser here. So, as you would expect, this Friday's expiration, 5:30, is the one with the greatest amount of open interest. That's not a surprise, right? Because everybody's trading the front end. But look at the next expiration out, because that is a little bit of a surprise. Where is the largest amount of trading activity or the largest amount of open interest outside of this Friday, December 17, 2027? Like, wait, what? And then September of this year. And so far, all of those are OPEX, which makes perfect sense, I guess. But then you got June 6th. That's an oddball. Then June 20. So a bit down the road. That shouldn't be there. No, that's next year. Never mind. I was just about to say that. That's an odd one. That don't fit. But yeah, June of next year is below that. So I don't. That just got my interest. So 2 years out. If we do look at that June expiration IV, this is what we get. And now you can really see those institutions' positions. And they're structured on the five level, right? 120, 125, 130, 135, 140, 145, blah, 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 blah. This is one of the reasons that we point out to people, try to play the round numbers. I mean, it's also why Tom Sosnoff over at Tasty Trades made a lot of comments about round numbers and looking at the value of the option, the options price, and to avoid trading an options price that was at a dollar value, 1.00, like straight up $1 flat. His comments were that people really suck at math, and rather than learning how to do it, they will just um, do the easiest thing that they can do, which is to trade a round number, which is crazy and odd, but it's his logic, not mine. And that they will gravitate towards round numbers because it makes the math easier in options work. Thought that was kind of funny. I know, right? He's like the smartest guy I've ever come across. And sometimes he says the funniest things. Absolutely. What we're looking at here is whale positioning, and it kind of highlights that May 20 discussion that we had just a few minutes ago. And we can see that the 120 level for since May 20 has really outshined all the other levels. Now, this is for this expiration, but when I was checking other expirations, 120 really stood out, right? So that 120 is a very highly traded level at this point, but they've been working on that position since May 20. And if we jump back into that one where it was showing the hills and peaks, here we are. The daily volume really dropped off into May 20, where it started to get bid back up again. And the daily open interest had really dropped off into the 20th, and then it started to get bid back up again. That was them coming back in, and they were coming in across all of the expirations. We can see that, but dominant in the 120. And I'm using Trading Ticks for a lot of this because, guys, we have that in the Discord. If you know what commands to use, you can bring up a lot of this information right here without ever having to go to the dashboard at all. So then I poked around at the top contracts being traded today. Not much of a surprise that we've got, today, this week's expiration in a lot of the contracts, and then June 20 for the next expiration. 135s, 125s on the puts, and looking at the calls, 135, 145, some 120s way out in September, 150s, but really just spread out, really all over the place. And there's that December 18, 2026 again. 24 million in premium, 6.8 volume traded today, open interest 49,000. All of that done within 14 orders. Hmm. Somebody, yeah, you sure it was you or Creed? I know it was one of you. I'd have to dig around in the cushions of my couch to find enough to pay for that one. Now here I swapped off and went to Vol Land and looking at the Vanna inertia, daily charm hedging levels, delta hedging. So we can see the dealer delta hedging, they're still negative. And this is for today. They have to get rid of this by the end of the day. Some more from Vol Land. The underlying vol and movement. One thing that I like about their platform is they'll calculate um, like the VIX calculation. They'll do that for whatever market symbol it is that you're looking at. If you think about how the VIX is calculated, it's based on SPX and the options that are traded within the SPX about 30 days out. Well, you can use that formula on anything. And so they took the VIX formula and they apply it to every single market that you want to look at. So here is NVIDIA's VIX, which is just really weird to say, but there you go. The underlying vol and that vol's movement. Has it been increasing, decreasing? Is there a very high level to it? Now, one thing that I've asked them to do, and I think they're working on it, is to chart that for us because I can see 52, but I don't know if that's ranked high or low. Where was it last week, last month? So, unless you are constantly looking at that number every single day, how do you know where that number stands in relation to any other day? So they're hopefully going to hear me out on that and put that number in a chart for us so that we can see it. But at the moment, I just don't have that, right? So um, I'm a vocal user of most products, and I've reached out and asked them, and they are really friendly, and they like the feedback because they want to make their stuff more retail friendly. So really hoping we get something out of that. This is gamma exposure for this Friday. We can see up here at the top over the next 2 days. Now, think of these lines and levels here as hills. We came down the hill and we can always travel downhill really easy, right? You can take a ball and roll it down the hill. But if you try to roll the boulder up the hill, you're going to have a really hard time doing that, right? Water doesn't like to run uphill. It's another way to think of it. So when you're looking at a chart, when it comes to these gamma, Vanna, Vega, all of these levels, just keep that water analogy in mind. So if we're going to see NVIDIA move to the upside over the next 2 days, it's going to have a really hard time, especially in front of 140, right? We can see the front run here. So we could get to 139 pretty easy, but making that final step to 140, oh, it's going to be a little tricky. So if we branch that out a little bit, because that is only 2 days, and we take it out to another expiration. Here we can see a 30-day gamma exposure. Now, same thing, 139, and then a big jump up, and then a steady climb, not too difficult until we get to 149, and then another beast of a jump into 150. So it's doable, it's possible, but it would be a struggle, right? And what would more likely happen is that we would see the dealer positioning change and the structure of this line would change, right? That it would very likely come down and it wouldn't even do what I just drew there. It would, it'd probably look more like that instead, right? It wouldn't just like turn around and pull some kind of Dukes of Hazard move. It would just sort of just flatten out. All these would just start coming down. Think of it like the yield curve, right? You wouldn't see the yield curve suddenly roll over like a rainbow. You would just see the whole thing settle down through the middle. Hopefully that makes sense. Probably weren't expecting discussions of Lucky Charms and Cheerios. Huh? What? They are consistent. If we look at gamma from a dealer adjusted position rather than just the regular gamma position, well, now the hill is gone. That big ramp that we had to deal with is gone. And instead, we've got a straight shot down into 140. Then we stall out really hard and flat. And that, again, is just for the next 2 days. So when we look at this, seeing us get to 140, really not much of a surprise. But to get through, to get above, to keep it, I think that would be more tricky. Then we've got Vanna. This is for Friday, and the same water up a hill analogy fits. 140 just continues to stand out as that difficult level. So if I sum up all of these complex Volland charts, the takeaway is it looks like Nvidia is going to be very sensitive to any volatility shocks, and that we could see significant impact due to dealer covering if we do get any volatility shocks, which kind of takes us back to the image earlier where we had the implied volatility at the bottom of the chart. I know it's not sexy and glamorous like a Volland chart, but I think this is easier for people to wrap their heads around because it's been around longer. Volatility is low. And if that changes and we get a vol shock, then it's very likely we're going to see dealers caught and their clients caught in a bit of a pickle. And that's where we could get another outsized move like we had a few years ago when we saw that 11% push. I took the time to highlight that implied volatility, the way that they calculate it on their website, as a standalone picture because I wanted to make sure that people had that, the underlying vol and movement for today on NVIDIA. And just kind of keep in mind that sensitivity shock and that discussion of, what could happen today. So if we swap instead from all of this positioning and what's been out there and start looking at what is being done today, we can look at something like spot gamma. Retail is in red, so that's their options positioning today. Retail jumped out about 11:45, and dealers um, jumped in around 20 after, maybe like right before Europe closed. And then they started to jump out of it right after Europe closed. It's odd to see retail front run dealers, but I'll take it when we get it. Then after the dump, right around 1 o'clock, we can see the flow starting to pick back up on the dealer side. But retail was first again. It's kind of funny. Still, I mean, they were both doing it. They both started to pick up at once. Then a big drop off, and everybody else seemed to be picking up whatever that person was setting down. So they're both working their way back up, and it matched price, right? Price started moving up here at the same time that dealer or retail started moving up, and it was followed with dealers behind it. So that is today's positioning happening, while we're talking, which I think provides some insight because we can see what they have been holding, what's on the deck, the implied vol, the all this positioning through the different expirations, but what's being traded today, because they won't hedge too far in advance, right? When it comes to like futures, we see them using futures to hedge today when there's something that they're scared of today. Same thing with something like an earnings event. It's a binary event. They'll wait until the day of for cost purposes, and then they'll hedge right in front of that event so that they didn't have to carry that extra hedge that whole time. I ran a search on the options being traded today, looking for the greatest amount of trades taken and then the greatest size within those trades. So we had one trade this afternoon, right before 1:30, about 5.6 in trades. Now the open interest on that was 12,000. So 5.6, that could be closing for all we know. And the total amount of trades or the size there was 4,800. So lots of premium. And this was for March of 2026. It was for the 110 strike. And when I grouped these, I sorted it by size. And if you look, they're all 110s. They're all for March 2026, which I thought was odd because in everything that we've looked at so far today for NVIDIA, we didn't see March 2026 in any of it. Kind of stands out a little bit. So looking at what's happening today did provide a little bit of insight, not just, looking back in the past. That's what I've got so far. I mean, there's other tools, other places that we could look, and we didn't even get into, the backdrop of the products they make, the new stuff they're trying to make, new markets that you're trying to get into. Just really looking at the price and the dealer positioning and the options flow. So when we put it all together, I had somebody ask me this the last time I went through such a spiel like this. What's the takeaway? When we put all the information together, what's the takeaway? Do we go long or do we go short? And I'll tell you, I've got an amazing track record when it comes to earnings. It's nearly flawless. I am wrong nearly 100% of the time if I try to tell you earnings are going to make it go up or down. It's a pretty good statistic, all things considered, right? I mean, nearly flawless. I do really good in the move into earnings, say that 21-day pre-earnings move, and I do pretty good after earnings in the 8 to 21 days after the report. When it comes to trading the actual earnings itself, my track record is nearly 100% loss rate. So I don't try to trade earnings because I'm horrible at it. You can take all that information and sum it up and try to identify your opportunity. And if I had to lay out some arguments, it would be to focus on those expected move ranges, how far it's supposed to go versus what it has done in the past, and think of the cheapest ways to do it. Lottery ticket stuff. Butterflies are really cheap. They're a way to really minimize your overall risk and exposure. And then, of course, if you can find it, some really cheap options play, something simple like a call or a put. The problem is trying to find a call or a put that's quote cheap, but also has some relevance of an opportunity to make money, right? Because it doesn't do you any good to find a 3 penny option if it has a snowball's chance in hell of actually making any money. Like that, who cares that it's cheap if it just can't win? Yeah. And yep. And don't get me wrong, I've got a knack for finding really, really cheap trades that have a low chance of winning. And if you do them enough times, you will hit. But if it has a 5% win rate, then you've got to trade it, a lot to get that win. And they usually pay out really good when you hit. But you have to take all the losses first before you get that hit. That's madness. My best Tesla trade was a $2 cost with a $40 exit on a call spread. That's pretty good. And really, when it comes to those crazy big ones, yeah, the guy from Simpler Trading, I always forget his name. Um, Dang it, I can't remember it, but it is the guy that runs Simpler Trading. He, John Carter, he was in an interview and he was talking about some of his biggest trades, and his position size, not contract size, but strike position size was massive. And it really got me thinking about how wide I build a position. And so since then, I have dabbled more than once with positions that are bigger than $2.50 wide, $5 wide. Just recently, I put this one in the chat, and I took this trade, and I'm still in it, where it was actually 4,900 and 5,400, so 515 points wide. And I'm still in it, but now I rolled it to 52, 54. So it's only 215 points wide, but it was 515 points wide. Now, those trades, most of the time, I'll close them and I get a little win or a little loss, right? But if one of those ever hits, that's massive. Yes, sir. That's a 500,000. I mean, it would cover the mortgage. Yeah, I'll take it. Oh, I'm sure I could complain about the taxes, I suppose. I will find something to be salty about. So you gotta like before I read his interview, I had never thought of building a position that wide before. And that's what it comes down to is, you're never going to get a position of that sort of profit unless you either put more contracts in or you make the position wider. And I didn't want to put more contracts on that increased the amount of total risk. So trying to find trades that are far out of the money that I can make really big and still have a chance of making money. I'm logging into my Tasty. I haven't looked at that trade since I rolled it, but let's see where it's sitting now. I rolled it just to lock in profit, so it's a no loss trade. That way I didn't need to close it, and it has 2 days left. It's going to expire if I don't do something with it. And it's very likely right now stuck with its minimum profit factor because it can't get any worse. If it goes to a loss, then I'll still just get whatever I rolled there. Yep. So my minimum profit is $145. At the time that I rolled it, it was trading at around $600. So I could have just closed it and locked in $600 profit. But I rolled it instead with a guaranteed profit of 145, and I thought, well, let's leave it on, see what happens. This will cover Nvidia's earnings. It'll do FOMC minutes and all that stuff, and maybe we'll have a pretty solid drop off. We didn't, but it's not a losing trade. It just didn't win as much as it could have. And as we can see, the position size is still at 52, 54. If I rolled it, I don't know, they might offer me something in the roll, but I doubt it because there's just nothing really left in here. What'd they do? I see that if I try to roll this right now, I can get it closer to the money farther out in time, but and I can get it for a credit. So they'll pay me to do it. Oh, I went too far, which is kind of nice, that I can get closer to the money and kick the can down the road so that I can carry the trade longer. And adding, even though it's just another $35, it's still another $35 on top of what I already had. But I'll probably just let it go. But a trade like that, you can milk it and kick it and milk it again and then kick it some more and just keep pushing it out as long as the market just doesn't rip against you too badly. 2 days left. We'll see what happens. When I went to roll it in the first place, all I rolled was that short leg and I brought money out of it that way. So if we think about doing that again, if I roll the strike up, see what kind of credit they'll offer me here. That's it. If you struggle with them like that, try. I like Weeble's desktop version better, but I don't like Weeble's options. So, eh, heck yeah. I really think they're overstating the move here. $13 for Nvidia's, or excuse me, 13% for Nvidia's earnings seems a bit much, all things considered, right? It's a real big outlier, and the fact that they generally overstate the expected move anyways tells us that we could probably shorten it up considerably and still have a decent payout if we wanted to do some short selling. The thing is, though, if you're wrong and you're running shorts, it's going to be a complete loss. You'll just be smashed. Mm-mm. So yeah, but butterflies would be the cheapest way to go, all things considered. I don't think you could get the risk any smaller than doing a butterfly. And so you could sprinkle them around all over the place, especially if you're using Robinhood so that you don't have the commissions. Make $1 wide butterflies on like the 120 level, the 124, that just like stagger them out on each side. Nice. If you look if you look at the calls, they go for next week, they go 250 wide at 150. So if you use 152 as the body, then you've got 150 and 155 as the wings, and it's a $9 debit. It's 9, 10. It's kind of fluctuating there. You could probably work the order and pick it up for 7 or 8. That's not a bad upside play. 150 has a lot of volume today, and 31,000 in the open interest today. So, a lot of people are looking at that 150 for next week. I kind of like that myself. It's $10. You know what I mean? I don't like to lose, but $10, that's a Starbucks coffee nowadays. Yeah, but do you really think we're going to blow out that big? In the numbers that I ran in the chat, if you take the market maker move and the implied vol average and you add them together, it comes up to an $18.50 move. And $18.50 is 13%. And we haven't even seen a 12% in the last 2 years, you know? If you look at the June 6th, which is next week, on Tasty Trade, they have the implied vol stopping at 148 and the one standard deviation at 150, which lines up perfectly between that 152, 150 zone. That's a good spot for that butterfly. Me too. Put that. I'm going to take that. And then we'll figure out the put side. Because really, I mean, at that price, why not? Really, well, price went up a little bit while we were. No, it didn't. I'm just on the wrong strike. I was going to say the price went up to about like $18, but it didn't. I'm going to try starting at $8 just to see if it instantly fills or not. Um, that might sound silly if you don't trade options on a day-to-day basis, but look, guys, I tell you, you always want to knock the number down. If it doesn't fill, fine, it doesn't fill. But if you try to put on an options trade and it immediately fills, there I hear that as gotcha, sucker, because I just paid up. Right. I just paid someone and they're giggling all the way to the bank. You don't want the trade to fill immediately if you're the one trying to buy it, because if it fills immediately, somebody just got you. You should have to work the order and negotiate it down to a better price. And if you can't, well, at least you tried. If you don't try, you'll never get it. So I'll roll this up to a higher cost in a few minutes. $10 was the spot. And try the other side now while we're waiting. Might as well just use the one standard deviation like we did on the call side. That would build us out around the 122, 123 area, but we're not $2.50 wide there. So the cost is going to be a little different just because we can't match the position exactly the same way. And yeah, the short is just on the other side. I've got $3 wide for 15 cents. 119, 122, 125. Yep, on the put side. It's a little more expensive than the calls, but it's a little wider than the calls. So it kind of makes up the difference. It has a P50 of 41 and a 10% pop. If I lost you guys, pop is probability of profit. What's your chances of actually making any money at all? It's about 10%. And then P50 is what's the chances that this trade could hit 50% of its natural profit before expiration, and that is around 40%. Half of $280 doesn't sound that bad when I'm paying $16 for it. Not at all. So I'm gonna lower the price on that one too. And if I have to adjust it, I will. But I didn't want to just immediately fill. And I'll bring it back to the calls now. Bump that up a little bit. 9 is the natural price, so I wouldn't be surprised if it fills. The puts actually got a little more expensive, so I'm chasing it at this point, but it's up to 14 now instead of 13. And I'll just keep working those. It's no rush. I'm not trying to get in. I got another 50 minutes still to go, so no rush. What's really cool, have you ripped apart a butterfly, a double butterfly like we're building, and turned it into a condor? So I've only managed to do this on Thinkorswim. I tried it on Robinhood. They denied me. And every time I've tried to do it on Tasty, the position didn't end up in a way that I could do it. So it wasn't that Tasty denied me, price denied me. So I've got two butterflies showing here, and in the middle is the loss. Combined between both of these, I'm looking at $26 of loss. But there's a put credit spread and there's a call credit spread built into these two. So if I get rid of the put debit spread and I get rid of the call debit spread, what I end up with is a big iron condor. And if we look at that, the big iron condor doesn't have a lot of money in it unless you're working with it as it gyrates up and down, which is what Jeremy was talking about when it's moving around and you can get credits for it as it's moving. This trade has almost, if you put this same trade on with more time than I'm using today, you don't have to dance the dance as bad with price action, but you'll also find that you're probably closing out the shorts and leaving the long. So you end up in a gamma iron and it'll be on one side or the other. But it's the vagaries and trickery of butterflies when it has more time in it. It's just an oddity that you don't get in a lot of other trades. Butterflies, when they have more life, they just do completely the opposite of what you would expect them to do. I just built what the trade would look like if we ended up with the Iron Condor, and the midpoint of that is $55, and the loss side is $245, which is just horrible. right? It's 245 on one side and 197 on the other. And that's because, we got a $2.50 wide trade on the call side, but we got a $3 trade on the put side. If we put all of these trades on combined, we end up with kind of the double diagonal look that we were all talking about last week. When if you guys were here for it, it's like the bat ears position. You can see the little ears poking out here. This middle section is above the zero line. The zero line being right there. So if you put two butterflies and an iron condor on, then if NVIDIA trades between, let's call it 120 and 150, you make money. If it peaks at 152, you got a chance to make $277. If it peaks at around 122, you got a chance to make around $300. And if it's anywhere in the middle, you get $27. It's not bad, right? And your aggregate risk on the far end, call side is 222 loss, put side is 272 loss. And I would say that it would probably be all of it. You probably wouldn't be able to salvage the trade. Like if Nvidia fell to 110 and then, these expire, that would probably be a max loss. I just can't see it going to 110. Can't even see it getting to 120 before expiration. But that green line is down there at 117, and that is the implied vol and market maker move combined. They are. I'm telling you, they study us like we study markets. Yeah, retail. Everything that I've come across says that those institutions are studying how we position and where we position to better take advantage of us. If I could prove it, that would be one thing. But when you talk about it, it just sounds like conspiracy tinfoil hats. Everybody rolls their eyes, whatever. Yeah, that is true. TTM is a classic example of so many things. I was looking at really big positioning because we didn't really peek at that too much. If you look at NVIDIA, way out there, $75 on the price range. We've got open interest at 15,000 contracts at the $75 strike on puts. Now, talk about a black swan, you know, there's nothing out there. But from an institution's point of view, right? Yeah, but I mean, snowball's chance in hell that we actually go there. And they are taking advantage of that and selling puts. Now, you might look at it and say, why would they sell a $4 put? Because they did it 15,000 times. And what do they care? What's their real risk here? You know what I mean? That get stock. Exactly. They're not gonna complain about that. So that shows that, if you've got the capital and you've got the size to do it, that's how you can take advantage of it. Any normal trader would look at that and say, "Well, why would I want to make $4?" Yeah, I get it. One contract, one of us selling a 75 put, but if you could do 1,000 of those, it's not a bad 9-day gain. You wouldn't even need it for 9 days, you know? Really. Um, yeah, I can totally do that. How about I just do it with pictures? It'll make it easier. So this is both the calls and the puts, my working price, and then the actual price. And I'm going to continue to work the order until I do get filled. So that 7 will probably be 9 by the time we're done. And the puts will probably be at 14 or 15 before we're done. I guess they're at 14 now, so they'll probably be at 15. I was looking at this $25 wide uh, put debit spread. What do they call it? A short put vertical. God, I love the funny names they come up with. A bear put vertical. Bear put spread. $7 for that spread. It's $25 wide. It's not a bad payout, right? You're looking at $2,400 if it hit, and it won't hit. You know what I mean? Like it won't hit. But if we even move in that direction and we close down, say, $15 at the end of the week, this trade will make some money. The question would be, will it make enough to offset the volatility crush? Because we're going to get crushed. That's a given. Since we've got two sides here, we're mitigating some of that volatility crush, but you can't get rid of all of it. I'm buying a 93 and I'm selling a 147 in the implied vol. So my exposure to volatility crush is the difference between those two values, which isn't bad, but it's still there. It's like what, 50, we just round up to 55. Okay, it's not bad. And my risk is $7. So the question is, when I build something like this, is what can I get make it any better? Right? I've got it wide. How close to the money can I get? So I just start walking it up the chain. And the reason I'm doing this, if you look at a lot of these values, they're the same, right? You see 14s, and then we move into the 15s, and it's not really changing all that much. So if we just start shifting this forward, when does the cost get to the point where I'm like, yeah, yeah, okay, I don't want to risk more than that? I'm at 8 now, moving into 9, still at 9. Nope, and I jumped to 11. Now, look at my open interest structure. I'm still okay. It's not as big as it was. 7,000 looked better than 1,000, but it's not bad. Just kind of dancing around the other side, see if I get anything to move that 11. Man, did you hear anything out of the Vegas Bitcoin conference this year? Like a black hole. Y- Normally that would be neon lights, dude. It'd be everywhere you look. And this year it's like, huh? What conference? Well, did you see what there's GME, and then everybody started to copy. It's not just GME, but everybody, all these no float penny stock punks buying up a bunch of Bitcoin. You know that's not going to end out well. That's crazy. Hmm. I'm working the order on a short put vertical, long put vertical, swip that around, buying a put spread using the 100 and the 75 strike. And I'm working the order for, um, I want it for 5. They're trying to sell it for 6. So I'm working that order, see what I can get out of it. It's $25 wide. And if I can get it for $5, I like it. Take the other side now. The skew's a little off here, so I don't think I'm going to get the same kind of positioning. 175, 200. It's $11. Yeah, it's kind of what I figured. $180 to 200, and it has decent volume and open interest at 180, 200, and it's $7. It's not perfect, but it'll work. So throwing that out there too. If I went too fast, I'll throw these in the chat as well. I get it, especially if you're only listening, the numbers coming at you can be a bit confusing. This is next Friday's expiration and pure lottery ticket plays, right? Like, look, just because we're putting on a call side and a put side does not mean that one or the other will hit. They can both lose. Keep that in mind. They both can't win, but they can both lose. Technically, they can both win, but I mean, that kind of move I've really only seen in something like the SPX. Oh, when it was, yeah, 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 yeah. I'm telling you, I miss the old days when Google, Amazon was sitting in thousands of dollars and their options were just so crazy. Man, that is very sweet. I was trying to remember. You remember how to do a jade lizard? I thought it had calls and put combo. Dang, I just don't remember. If you guys are wondering what we're talking about, it's from Jen and Lizzie, right? From Tasty Trades, came out with their own trade. But I don't. Okay, found my notes. All right. The construction of the jade lizard. Oh wait, I thought that was a picture. I don't want to start a video. It looks like there we go. Short put plus an out of the money call spread, and you want about 70% of the credit on the short put and 30% of the credit on the short call spread, and the total credit is greater than the width of the call spread. Anyway, it sounds a bit complex, right? But I'll just put the picture in the chat. Makes it easier to see. Something I haven't done for a while, but it's worth considering too. Back in the day, I used to stream every day, like every day, mornings, afternoons, and of course, you run out of things to talk about. So what we would do is we would bring up one of these videos where Tasty Trades had done some really deep research on a particular topic, and we'd watch the video and pause, discuss what they're talking about, play the video some more, pause, talk about it. And we were doing that because people had asked questions, like listen to Tasty Trade and it sounds great. If you're an options trader, you understand exactly what they're talking about. But if you're really just getting into it and you try listening to them, it's like, what the hell did he just say? I have no idea what supposed to do with it. And so we were playing the videos, pausing it, and talking about it so that we could get people all on the same page. You would get something out of the video from Tasty Trade. It gave us something to do, right? So, like, if you guys run across a video that you want to, talk about, shoot it as an idea. Let me see what it is. If it's Tasty Trade, there's no argument at all. We'll play it and work through it. If it's not Tasty Trades and it's just somebody else, let me know in advance so I can check them out, make sure that they're not trying to sell us something, or there's some weirdos out there. And of course, there's our own videos. If you've watched some of the videos, like the next level stuff, when I was making the next level stuff, I was told, don't worry about it. Somebody else is going to do the intro stuff. And then it'll tie in to the advanced level stuff that I'm doing. It didn't really work out that way. So we've got beginner stuff and then we've got next level stuff, but there's not much in the middle. So if you're struggling with the next level material and you want to go through one of those, any of the topics on there anytime, hit us up. You got moderators that just love nerding out on options. So this second picture that I shared in the chat can be used as an earnings play with wide break even prices. Now, NVIDIA is just not going to work for me for this one, right? Because the account that I'm using right now wouldn't be able to cover this trade. But if it was something else, something cheaper, then, and we've got a lot of those drone companies, um, We've got quantum as a service companies, SMRs, the nuclear reactor companies, a lot of gold mining companies. So there's all kinds of earnings that are coming up that could benefit from the Jade Lizard, and they're less than $50 stocks. So make it easier for people with accounts that aren't in the 200 $300,000 range. Yeah, no, I'm a huge fan of JLBY. A huge fan. It's in my research box that I've been posting in the chat and everything else. Toyota got into them, which is why they popped, but they were already on my radar. These guys are over in the United Arab Emirates with a 6-year contract, no competition, and they're building out all the infrastructure over there. So in 6 years, when other companies can go over there, they're going to have to use these guys' existing infrastructure. So they'll have to retrofit their vehicles to use these charging stations, use these plugs. You get the idea, right? Like they are now going to be the what do you call it, the standard in the United Emirates. Uh, HE, on the other hand, or EH, is in Brazil. Same thing. They were supposed to have their own contract down there, but now they're getting competition from my notes here, EVEX, which is kind of competition, but not exactly. EVEX, they do drone and taxis, air mobility, but yeah, they're getting into Brazil now too. It just sounds like the Jetsons, huh? Yeah. The red tape just gridlocks us, you know. I was really hoping that we'd see a pressure to change this after the California fires and all that talk about the red tape stopping people from building their homes. I I just thought, what a natural tie-in to remove red tape across the board. SMRs, natural, you know, homes, businesses, everything's got so much red tape and you can't get anything done anymore. Yeah, I love that. Oppose, oppose, oppose. It doesn't matter what they say. Water's wet. Oh no, we got to oppose that. Grass is green. Nope, nope, nope. Argue against that. It's ignorance in true form. Those options on JOBY, some of those things hit 600%, 500%. Some pretty decent moves. Look at the call sizzle today. Oh man, 24.5. That's the whole space was just getting lit up, and then it's like it all just dried up at once. We hit the first of the year, and it was like no more risky stuff, and everything just collapsed. And now we haven't quite doubled, but we went from $5 to nearly $9. So the um, the IPO has been the resistance that we've been fighting with. IPO open. Let's move that up to IPO close. All right, there's the close. So in June 2023, we got there and rejected. And then in October, no, it was actually January 2025, we got close to that IPO level and rejected. So, the concern is that we're setting these monthly lower highs. That we got lower high, lower high, lower high, and that's not good. So I'd really like to break above that one, January 2025, um, before I start to size up. But getting in now, I mean, I don't like getting in after it's up 29%. So I wouldn't want to get in today, but no. But keep this one on your radar, guys, and let it pull back. It's there's always the exception, like Palantir. You know what I mean? Where something you just keep looking at Palantir like, what is wrong with this company? It just doesn't stop. It just keeps going and going and going. Yeah. You like those end of day runs, huh? We got back down to the Globex low right before 3 o'clock. And then we ran back up to 21.5 and dropped all the way back down again to that Globex low. Yeah. And it wasn't going to be much of a surprise that it was a sideways day, right? That was kind of the takeaway, knowing that it was Nvidia's earnings. But even in that sideways action, we had some pretty wild swings today, all things considered. If you guys look at yesterday's price action, spot up, vol up is the typical phrase for that non-stop run that we had yesterday. That forced buying, spot up, vol up, grind day. Those are the familiar nicknames that we give it. And I was trying to give Volland a chance to really showcase their product. So I reached out to them and I was like, "Hey, use your platform and really light up yesterday's price action for me and explain to me in your tools how a trader would have known to stay long and not try to short into that all day yesterday." Now, think about how you guys traded yesterday, right? Like when I was new, a day like yesterday would have kicked my butt because it kept showing examples like it was ready to do, like it was done, it was ready to fall, done, ready to fall. And what did it do? It just kept going higher. It's a very specific, unique kind of day, and I absolutely love this kind of day. You can spot them in the pre-market sometimes, to where you know in advance it's going to be one of these kind of days. And out of the six types of trading days that we get in the indexes, this is a really good one, and it's very, very unique. So with Volland having, all this expensive data and software, and his comeback when I tossed him this softball question was a bunch of gibberish. Nothing. When I poked and prodded him a little bit more and dug deeper into it, he doesn't understand the 6 days that we have, the repeating pattern. There's only six types of trading days. That's all you got. And they just keep repeating over and over again. So when you know what those six are, then your only duty for the day is to figure out, well, which one of those days are we in right now? And they can change at any time. Yesterday, we could have done a rounded reversal and fell back down. It didn't have to end the way that it did, but it did. So it's this one of the six. It was interesting. It kind of just reminded me, the guy from Ballland. I'm not trying to pick on him. He's a really smart guy, and he built this amazing platform. And when it comes to dealer gamma products and tools, I mean, he's a snob at it. Just like I say, I'm a snob when it comes to options prices. Right? If it's not liquid, I don't want to trade it because I'm an options snob. And if the prices are out of whack, I don't want to trade it because I'm an options snob. Well, this guy's a dealer snob, and he had no clue what the heck I was talking about with yesterday's price action. No idea, and no way to answer the question. It didn't matter how sophisticated his tool was or how much time and effort and research and college degrees he had behind building his platform. He had no idea what the heck I was talking about with this yesterday. If you're hearing me in the replay or whatever, and you're thinking, "Oh, what are these 6 days? I want to figure that out." I have shared a book before called Secrets of a Pivot Boss. It's in the chat. You should be able to search for it, and it will give you the layup. Really simple. Those 6 days in image form so that you know what they look like, and the tells that you can spot using initial balance and previous days highs and lows. Like they're simple things. You won't have to, buy some sophisticated software, get a subscription to anything. You can just use price action. And we get the day like yesterday, those 2% moves. We get those um, now once a month or so. I mean, they come around. They're not going to happen every week, but frequently enough to make it worth your while to know when it's coming. How many of you tried to short that thing yesterday and just kept getting run over? Because I heard from two people that got hit again and again and again and again trying to short this thing. It is, isn't it? So I shared the book in the chat for anybody that wants to take a look at it. It's not a brand new book. It's been around for quite a while, but it gets that conversation started, of these unique kind of days. And I used to only focus on four main days, basically because I was combining sideways days and range days into the same kind of day, which it really does them a disservice. They are unique, they need to be separated, but that's the way I was doing it. So I've had to expand on that a little bit and not use 4 days. Instead, I use six now, like everybody else. But yeah, it's worth a read. And you can throw it over into like Notebook LM, that Google product, and turn it into a podcast if you want to. So it'll just read the book, not necessarily read the book, because you can get that with anything. It will summarize the book into a podcast format to kind of lay out the highlights for you. And I, don't know, I like doing that stuff with things like long winded PDFs just to kind of get the broad strokes. Something to consider. Yeah. Because I tried to get it to where it'll read it word for word, but I find that so boring. I'd rather read it myself. So I kept messing around with the different AI products, and then that Notebook LM where they summarize it and make it into a podcast, and then it's two people, like a man and a woman having this conversation with each other about the whatever product you gave it. That I found easier to listen to. That way, if I'm cooking or whatever, maybe I'm out in the garage messing with some woodwork, I keep learning something. And of course, you can share whatever it makes. So if you wanted to, give others a link to it, then you can do that as well. My bear scanner is lit up for real. What do you think of the shipping companies over the next 6 to 8 months? Who was Zim before they are now? I noticed that they haven't been around very long, couple of years. Since that last earnings in November, it's been consistently lower high, lower low, broke a major structure at 16 and a quarter, um, 16, I guess. Been just consistent, persistent move to the downside and still under the 200-week moving average. It's not the worst in the world, but that's a recipe for disaster. Wasn't China ramping up with a whole new fleet? China's trying to put together that 2025 theme that they're, oh, I gotta look it up so I say it correctly. It's this push for like global global technology, AI, something or other, 2025. It's their slogan for this year, right? They're really trying to push homegrown AI, chip building, chip making. We have Tima, we have FOMO, and now we've got Taco. Trump always chickens out. Taco. I just saw that. That's really funny though. Really. I wonder. I was reading the headline. Trump denies he's chickening out on actually letting steep tariffs take effect. Now, from what from my position, it was the bond move, right? And it wasn't him chickening out, it was him being told, "Look, you're breaking something that, is going to take a long time to be fixed if you actually finish breaking this thing. So stop before it gets any worse." And he stopped. That's my theory, right? Yeah, that he was led by people who understand the bond market and was told, "Stop, dude. You're going against bond vigilantes and they're not playing." But is it going to be enough? We've seen him try to toe the line before, where he tries to be a good boy and color inside the lines, and then he says, "Ah, screw it," and he just goes back to his own natural way of doing things. If he says screw it and goes back to his natural way of doing things with Japan poised the way they are, it can get ugly really fast. It's why I continue to focus so hard on Japan in the first place. I mean, they're teetering on the edge. That move we saw last year, that Japan carry trade unwind in what, August, September? That JP Morgan said that wasn't even half, or Goldman Sachs or whoever, the analysts, they said that wasn't even half of the carry trade unwind. So it's kind of it, to poke at the guy and say, "Oh, he's chickening out. He's backing off." It's kind of like poking the bear. Don't see a reason to rile him up on the issue. Be better to leave it alone. So 5950 in the SPX really has done its job. 6,000 continues to be elusive, and we just can't get there. And it looks like that is going to stick for the week so far. 600 on SPY, right? There's just so much in the way. Did you see Spot Gamma rolled the put wall up this morning? It was rolled up significantly. It was in like the 59 area, and it was like way down in like 56. It was a huge move up. And of course, I was waiting for them to say something in the founders notes about how it's a 1 day play, because sometimes, the algos just pick up a 1 day, 0 day put wall action, and then the next day it's just right back down where it was. But they didn't mention it in the founders note, which typically, if they don't mention it, it implies that it's not a one off and that it's going to stick. And that's going to be interesting, because having the put wall roll up a couple hundred points is a very bullish behavior. You know, Oh yeah, it's becoming more and more of a thing. Tasty Trades has done a lot of videos on 0 day stuff, and they highlighted a lot of that institutional activity as well. Here's yesterday's put wall, and here's today's put wall. So yesterday from 57, I thought it was lower, but still 57 to 59. So now I'm really interested in what it's going to look like tomorrow, especially since, we closed inside of yesterday's range, we failed to go anywhere. It was a good stabilizing day. And that put wall is higher than the volatility trigger. It's higher than zero gamma. It doesn't make any sense. I didn't get those worked. Right when you said something about fill, I remembered my NVIDIAs were still working. I never got them filled. Dang it. That's what I get for trying to pinch that penny. I was more than willing Yeah, I was more than willing to pay the price that was shown. I just didn't want to start there, right? And then we got busy talking and I spaced it off, forgot to circle back and just go ahead and pay it. Dang it. All right. Yeah. Most options traded: GameStop, Palantir, Nvidia, Tesla. Those were the most active options traded today. PLTR, man, it just keeps going and going and going. GameStop's convertible bond has a 35 to 40% conversion premium. MicroStrategy is running at 55% premium, at least back in November, anyways. You see that TEM short report? Yeah, They were down 16% earlier today. Spruce Point Management, which took over for the other short company. Oh, shoot, I forget the name. Uh, The other short company, they're not around anymore, right? And so somebody else is trying to take their place. And so Spruce Point is trying to be the new short company. Dang it, for the life of me, I can't remember that short company's name. Usually it's right there on the, it's how it goes, right? You're trying to remember a name and you can't. It's the Kevin Bacon issue. So, anyways, um, these guys are the new short, or they're trying to be the new short company, and they came out with a report on TEM that says it's just smoke and mirrors and hot air, and it's going to collapse. And well, the market jumped onto that. They called for 60% downside in TEM. Yeah, that's bold. Yeah. Tempest is coming down like a freight train into that 200 period moving average. I wouldn't expect much, and it's been sideways forever. 30 to 90. It's a big chop, big range. Yeah, you could use that one for like your textbook. Always looking for examples. Like ta-da, done. Hindenburg. Ha! I had to Google it, but dang it, that's the one. The Hindenburg Research Company is done. They wrapped up at the end of 2024. And so now people are vying to be the new short report company. Yep. So here's one for you guys. I don't show it very often because I still don't have a funded account. Not because I, I went to get a funded account, but when I was filling all this out, I didn't say it was a joint account that I was making. So then I go to connect it to my bank, and they say, "Oh, well, that you're sharing a bank account with your wife. You can't because this account was for you." I thought, well, that's really petty. That is really petty. I've never had any other broker do this to me. And so out of spite, I haven't done anything to fix it. And so it's an account that I have open, but it's not funded. Their investment news and highlights and reels, I keep it up all day long. They usually have really good intel coming through here. Um, and across the top, they have some things that I like that I don't really find in a lot of other places, including um, popular funds or firms. So if you are like me and you track institutional investors, then you'll like this. Now, it doesn't have, everybody, but there are some like Soros Capital, Greenwoods. I'm sure everybody knows ARK or Berkshire, right? These are not shadowy companies, they're in the spotlight, but it's an institutional tracker. So you can kind of scroll down see where their holdings are at, where they changed. And of course, it's delayed. You got to keep your eye on the update, but it's looking at, May 21st, May 23rd. That's not bad. At least it's not March, like a lot of the others. So it's just this has really nice features to it. And I'm not even on their platform. I'm just on their website. If I was to load the desktop platform for this company, it's called Mumu. The desktop platform is pretty fantastic. I mean, all things considered, it's impressive. I keep wanting to fund it, and then on the other side of it, I'm like, screw you. You pissed me off, and I'm not gonna make you any money on my commissions. I will do my trading somewhere else. But yet I keep using their platform. So I'm sure I'm gonna end up funding it at some point. I'm just frustrated with them. Their their news is just awesome. I keep my eye on it in the morning and through the day. It's just pretty dang nice, all things considered. And they got the headlines and then latest news. So I kind of jump back and forth between those. And yeah, the desktop is better, but I've already got like four brokers running during the day on two different computers, and I don't need a fifth broker running on its own platform. Wow, look at AI, right? C3 AI. Man, very nice. That turned out really well, huh? Really well. Yep. That brings you back up to like a big old cup. It's a really nice base from one quarter to the next too. It got out of that earnings in late February, early March, and then it just developed this really strong base, held there for the 50 to come down and jumped. Nice. Yeah, it's like those people that pick a sports team based on the color of the uniforms or something. They're like, I don't care, man. Just tell me the track record. And if I can see a trade, I don't care what the company does. It can do cigarettes, tobacco, alcohol, pot. I don't care. Can I make money on the trade and what's my risk? Yeah, there's no brand loyalty when it comes to where the money goes. when it comes to trading that or long-term investing, that's something that you got to be real careful of. I liked AMD when it was $12 a share. It was like the first thing I ever traded, and it was my baby. It's like, oh, AMD. I knew that company so well, but you got to get to the point where you don't care about what you like or what you don't like. In long-term trading, I found that to be a sneaky little snake that'll bite you. You fall in love with a company because you do all the work and you've been carrying it for so long, and you're like, this turd ain't floating anymore. Yeah, all things considered, it seems like the market's going to live. Not a surprise. Yeah, did you? I got to share this with you. Um, did you? That's crazy. I put the link in the chat this morning, I think, too. Um, there's a company out there trying to push for next level AI um, agents through mobile device. Tether. Yep. Yep. That's what I was. Yep. Through Tether. And that way they can bypass the whole data centers. And here's the link if anybody wants to read about it. Yep. That's the one. That's some crazy stuff, dude. Ubuntu. Yeah. On my Twitter this morning, I shared out an article that was it was giving AI sensory controls so that it could detect things around it, like eyes, ears, feeling the temperature around it, that sort of thing. It was a very odd article. I will share the link in the chat with you guys. It fit the whole AI conversation that I came into this morning that was in the chat. So let me bring up this. So here's what I'm referencing. OpenAI's O3 model sabotaged a shutdown mechanism. This was in the chat this morning, right? So um, I was reading that, and then when I turned on my Twitter, I came across Weaver, and it was talking about this article here: sensors detecting physical or environmental changes and converting it into digital data that machines can understand, acting like human senses. They gather information for informed decisions. When you combine that with AI, MIMS sensors transform how we interact with the world and ourselves. And I thought, oh, that's all we need is an AI that can deny being turned off, and then also has sensory data so it can feel. Well, at least that's all it is. Nothing, nothing bad. any uh, any bets on whether or not Wong is going to talk about quantum? You know, it just he made that off the cuff comment that quantum was 10 to 15 years out, and then they attacked him and he backpedaled, and now he's just like a footstool for those quantum companies, a little lapdog. They they put him in check, and he hasn't come out of it since. You know the symbol for that light bridge company? That's the one, LTBR. Nope. Well, I mean, why not, right? That $18 is a pretty solid level. Can't blame me there. They're not pretty. Yeah, you'd have been making book. Just getting it done fast. Why take 6 months to hit 12% when you can do it in 2 days? Heck yeah. Geez, I lost track of UPS. It's below $100. Just kind of cycling through, and I, I don't know when it got there. That got there fast. Jeez. And FedEx broke the half. Ties in with that whole shipping idea. It's possible that I was focused on the last mile shipping. It's where they've been trying to cut a lot of their cost because it's the most expensive, right? That last bit. And I haven't looked at any headlines that were anything other than that. So it's possible they've been modifying their shipping, but they've been putting a lot of money into that last mile. That's crazy. Are you signed up to get drone deliveries? Because if you're that close to the center, you should get drone deliveries. Wow, that would be cool. If you look at Amazon on the monthly, it's forming this really beautiful scoop pattern. looking pretty good. Their their open interest looks really good, but the volume's kind of flat on the put side. Calls got a lot more volume. I'm not sure. I didn't listen. That's what in how I ended up trading a lot more equities. I got to be, I don't, snob is the best word for it, and I'm not a fan of the word, but I got so picky when it came to the options that I was like, I'd rather just trade the equity, just screw it. And it's really been a load off, not having to mess around with junk companies' options. And that has saved me so much time because I used to hesitate and dither and like, well, maybe, no, I don't know. Now I look at it like, nah, I ain't messing with that trash. Nope. Yeah. Yes. And then you don't have to be so particular about liquidity. And that's I've had people call me out on that where they're like, "Hey, I can't believe you traded the options on that. It's trash." I'm like, "Yeah, but I was selling to open." It was a naked put. It's fine. You don't see me. I look in there. I broke a wing off an Amazon butterfly for June 20 expiration. It's 215, 210, 207 and a half. And it's not bad. It's offering 60 cents in credit. If we get to 210, it's offering about $300 in profit. And if we overshot 213, then we start getting into the hole and it risks about $190, which why would I ever eat that full amount? Because it's going to run at you, right? You wouldn't go to max loss unless you just held it into the close. Who would do that? So that max loss isn't even on the table. At worst, 50% of that loss, so call it $95, even just round up and call it $100 at worst. Not a bad position. Kind of adjust the lines here, put it out on the chart. That's a nice recovery. Consistency has merits. I I downshifted on my Vulcan the other day. Normally it's me and the wife both on there, and I was by myself because I was following her into town. We were gonna leave the car and she was gonna ride with me. And I'm not used to being on the bike by myself. I dropped the clutch with a little too high RPM, and that back end slid around. It looked like some stuff out of the Matrix. I kept it upright, but yeah, I think I earned a couple of extra gray hairs that day. Yeah, that was a bit more than I was asking for, and I don't know, you get comfortable, complacent driving a vehicle the same way all the time. Bike, car, truck, doesn't matter. You know its limits, but then remove something from the equation, and suddenly everything changes. All right, guys, have a good evening. I'm gonna jump off of here later.